Stock options trading for beginners is what this video is about. This video is going to give you access to some resources and to some other videos that will allow you to have everything you need to get started in using a relatively simple blueprint to allow you to be profitably trading in the stock and stock options market in a short amount of time. In fact, this very same information is what I used about 2 years ago when I bought 2,200 shares of a stock right here at $5.50, which this line indicates $5.50. This chart right here, this is a weekly chart, so each one of these candles represents 1 week of time. This purple line is a 25-day moving average. This greenish line here is a 50-day moving average. And as you see, the stock came down, touched the 50-day and rallied up. And I really thought that that the stock wasn't going to go much below $5.50. I thought it would be back up here, and I thought I could sell it for $6 in relatively a short amount of time. But as you can see, I was wrong. I was wrong. And using this strategy, I'm going to show you how I made a significant amount of money even being wrong. So I bought 2,200 shares at $5.50 right here. You can see that the stock fell significantly below $5.50, and because this is a weekly chart, each one of these red or green things representing 1 week of time, you can see that it was about a year before I was back to break even. And then a couple weeks after I was back to break even, I sold all 2,200 shares here at $6 a share. So 50 cents profit at 2,200 shares equals $1,100, right? We're talking about trading stock options here, my friends. My actual net profit was $3,285.78. Around $2,000 of that came to me this whole time. The stock was trading below the price that I bought it at. Let that sink in. I made about $2,000 off from a stock that was trading below the price that I bought it in. Hey, if you want to be able to do that too, then watch this video all the way through, go through the other resources I give you, and consider hovering your mouse over that subscribe button and do the click. Because this is exactly the information that you will be able to get. So let's get into stock options trading for beginners. I'm going to give you some rules of thumb, some basic general principles to keep in mind as you begin your journey. Priority number 1, risk management. When you do good risk management, you can be in a position where the stock you bought here is trading down here and you're still cash flowing it, or doing some other things while it's lower. Risk management number 1. If you lose your money, you can't trade. You have to have money to trade. So keeping your money is the most important thing. You will make money, but rule number 1 has to be, priority rule number 1 has to be risk management. It's not making money, it's risk management. Now, as a beginner into the stock and stock options world, I want you to choose one, not 10, not 50, not 5, not 3, not 4, only one number. One. Choose one stock that you can buy 100 shares of. Why 100 shares? Because stock options work in increments of 100 shares. So you need to pick a stock that you can buy at least 100 shares of. Why just one stock? In the beginning, there's going to be a learning curve. And I want to help you shorten that learning curve by instead of looking around at all these different things, I want you to focus and learn on one thing. It's so much easier when all your focus is on one thing and it's not being spread an inch deep, mile wide. You're going to go a mile deep, an inch wide. How would you choose a stock? You're going to use the stock selection guide that you can download below in the description of this video. That's one of the resources to get. Use that. It'll give you a framework. You can add things to it, you can take things out of it, but it's going to give you a framework to start with on understanding how to pick a stock, one stock, with risk management being your priority. And then paper trade. Paper trade. The world is full of examples of different industries that use simulated training in order to be prepared to go do the real thing. Let's think about people that do any type of competitive fighting. They don't go into the ring and fight an opponent the first day that they show up. They punch bags, they spar, they do drills. None of that is the real thing. How about firefighters? Can you imagine them doing simulated trainings, or do you think in order to, when it's the first day on the job for the new firefighter, the chief firefighter decides to light the bank on fire so that way they can practice? No, they don't do that. They do simulated training. You're going to do the same thing. Why are you going to do this? Because priority number one, risk management. Validate to yourself. There's going to be newbie mistakes. You might press the wrong button. You might not even know what button to press. Just learn, make mistakes in a simulated account. Now, when you decide to start trading real money, only use money you can afford to lose. You're not trying to trade your mortgage money, your rent money, the money you need to pay for your kids' braces, whatever, the electric bill, none of that stuff. This is money you can afford to lose. All right? The money you can afford to lose. This is not quick flip money. This is money you can afford to lose. I gave you an example. I had my money tied up for over a year. Right? If that was money that I needed, I would have been hurting. So this is money you can afford to lose in case you do lose it. But if you do some good risk management and some good stock selection, you paper trade first, there's going to be a good chance that you're going to keep your money. But don't take a chance, right? We talk about risk management, priority number one. Don't risk missing your bills, right? Only use money you can afford to lose. So now I gave you some fundamental guidelines. Let's look at there's going to be a link right here. Now you can come back and watch that. It'll be at the 8-minute 25-second mark. It's going to be a link to a couple different videos. The first video is this one, how to generate consistent income trading options. This is going to be a simple blueprint to trading options. And this blueprint is going to consist of the next two videos. This one will go into more detail of selling put options. And the third video will be selling call options. So the blueprint is going to describe how you start off selling a cash secured put option until you get assigned. And then once you get assigned, you start selling a covered call option until you get assigned. And then you go back to selling a cash secured put option. If you don't know what those terms are, you don't understand what it means, no problem. That's why you're going to watch these 3 videos. It's going to break it down. It's going to be a lot of repetition in it. By the time you watch these 3 videos, you're going to know not only what these terms mean, but you also know how to set up your own stock charts and have a way to approach your beginning of your paper trading and your beautiful, beautiful stock options journey. Now, as we're winding up this video, I want to go back to showing you when I bought the stock at $5.50. Each one of these represents 100 shares of stock. So, through here, I end up accumulating 2,200 shares, all at the strike price, all at the price of $5.50. I guess some down here were for $5. And then everything on this side, this is all credit. This is all money that I brought in through dividends or selling more put options, selling covered call options. You know, sometimes it was just a little bit, you know, like 27 bucks, $7. Sometimes it was a little more, 50, 30. Sometimes it was real small, right? Like $3. Other times it was bigger, $140, $141, 75 right there. So it can vary. And eventually I cashed out of everything at $6. Now, what's interesting about this is let's pretend you're doing the same thing. Now I'm going to use numbers that are not real. I'm going to use very unrealistic numbers to quickly, the key is quickly, go through it and show you something. So let's say that you decide you are going to do this simple blueprint on stock ABC, and you start your first you sell your first let's say it's a $5 stock, and you sell your first covered call, cash secured put option on it, and you bring in 25 bucks, which it's probably not going to happen like this, but let's just go through the math. All right, you bring in 25 bucks. So over here it shows you, right, ticker symbol ABC so far has generated you 25. Now you do that again, that expires worthless. If you don't know what that term is, you got to watch those videos. Now you've brought in 50 bucks. But this time on ticker symbol ABC, this time you got assigned. So what happens here is now you're buying the stock. And it just happens to be that you pay, let's say you end up, you sold it for a strike price of $4. So that means now you have, it's 400 times 100 shares, right? So $400 you paid for the purchase of these 100 shares of stock. But look at your cost basis. Your cost basis isn't 400. It shows 400 here, but when you subtract this premium that you brought in from selling options, it lowers your cost basis down to $3.50. Now let's say ABC right here pays you a dividend, and it happens to pay you 15 bucks. Lowers down your cost basis a little more. And let's say now you're going to start selling covered call options, and you happen to get a whopper. For some reason you pull in 75. Wow, look at that. Look at that. It brought down your cost basis to $2.60. Now whatever your dividend yield was here, your dividend yield, the number, you're still going to get paid the same. You bring in another $15 from dividends, you're still getting paid the same, but that's $15 off from $2.60. So as your cost basis goes down, your ROI goes up. Yield, dividend yield. So now you're at $2.45. And let's say you do this over time, so you bring in another $50 here. Let's say you bring in over time, you bring in another $100. And now you're down to 95 cents. And you happen to bring in $95. So what do you have right here? It shows you having a cost basis of 0, right? Because what happened is that you paid $400 for 100 shares of stock. And now you've pulled out $400 over time. So you have your $400 back, but you still have the 100 shares of stock. And what are you still doing? You're still collecting dividends. You're still selling covered call options. So you bought the golden goose. The golden goose gave you golden eggs. Now you paid off the golden goose. So you have your money back. You have the goose still giving you golden eggs. And you're getting more eggs. I kind of messed up that example. But anyways, go through this stuff. Watch those other videos, and click the link in the description below. It's going to be a link to ihavesuccess.com. download any of the stuff that you want, but especially this one, cash secured put stock selection guide. It'll get you going. Download this one too. 3 stocks I sell, cash secured put options on. Don't necessarily, these might not be the best stocks for you, but just look at the mental framework that why I like those ones. Take the example of the thinking and apply the thinking to your own situation so you make the best decisions for yourself. Because I'll tell you what, this is not financial advice. I'm not your financial advisor. Ain't got no legal stuff for that, my friend. And anyways, you can get these other ones. Stock option Greeks cheat sheet, 3 underused tactics to transform your financial results. I'm telling you, if you implement number 3, your life will definitely change. I just don't know if you can do it. And if that prompts you to say, yeah, I can do it. What do you mean? I hope it does, but I honestly just don't know if you can do it. Most people don't have the drive. Most people don't have the discipline. Most people will not be able to implement number 3 because they lack discipline. They lack willpower. They lack what's needed. I hope that's not you. I hope you have those things. You guys have a fantastic day. Talk to you later. Bye-bye.